Hello and welcome this Monday as we talk about trading with technical indicators. My name is James Boyd. We welcome to all of you here today. Happy Monday to you, GH, WW, RS, or Rick S, Elena, Ron Edwards, and many others. Silas, hello to you. Let's go ahead and hop right in. Also, we have Connie Hill in the chat, so we welcome her. She will teach ETFs later this afternoon. Quick reminder on ETFs on Monday afternoon with Connie, Kevin and I on Friday. Remember, those are great sessions. The ETF sessions are not recorded, so join Connie live today. That'll be coming up just shortly. So just real quick as we get started, I want to give us a quick reminder that today's topic, as always, at this time, trading with technical indicators. My focus here today is really talking about, do you ever feel like you're really good at seeing the entries when you look back? Do you ever feel like at the moment in time you see the potential entry, you kind of struggle with that same confidence? That's what I want to talk about here today, because I think all of us, when we look back, we could tell you where we would have gotten in, right? So I want to bring that up. And I also want to attach what we talked about on Friday here today. Now, on Friday, we really talked about using scripts on the chart, and I want to kind of talk about having that same confidence to take the entries at the moment the investor sees them. Okay. Now, what I'm going to do is, as we talk about this here today, remember the information here is provided for general informational purposes only, should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. In other words, you get to choose. Okay. So, and also remember that options carry a high level of risk, not suitable for all investors. We're going to do some stock examples and some option examples. I have a number of stocks I want to get into today. I want to kind of use today as a way to kind of set up the week. And also I had a question regarding kind of the credit downgrade. We will bring up that as well as we kind of start off. Yes, I did see that question. I have that down. Now, also remember that short options can be assigned at any time. That's known as American style options. Remember that Paper Money, the software application, is for educational purposes. That's what we use in our classes for the most part, okay? And also remember that investing involves risk, including loss of principal. So what I want to do here today is let's kind of talk about, we saw that Moody's did downgrade the U.S. credit rating a notch. Now, let's kind of go into kind of how the market is absorbing that and kind of some of the relationships that we're seeing from that. What we're then going to do is link with what we talked about on Friday to today and look and see if there's any stocks that we could practice using technical indicators in the current market to place bullish or bearish trades. Now, what I want to do here is I want to just bring up, let's bring up this chart right here, and we're going to use, so first off, on the left-hand side, we just kind of have a list of, let's go indexes, okay? So first off, we do see that if you look at the VIX, and we had a nice discussion here the other day on the VIX, and it is up to 83 cents, 4% or so, but still holding right around 18. Now, if you would ask me, what was the reaction of a credit downgrade? So there's three bureaus, right? Three agencies, and Moody's was the last of the three to downgrade. The last time we had a downgrade was in August of 2011. I remember it like yesterday, and the market fell a heck of a lot more, down 5 to 6% on the indexes. So here's the deal with that downgrade, the last of the three, the market today, if we talk about how has the market absorbed this, the Dow is at the high. I'll bring that up in just a moment. It's at the high of the session, okay? The S&P just went positive. The NASDAQ was down 1.5%, and it's gone positive too. Now, so if we said to ourselves, hey, could there be some nervousness out there about where the U.S. could be headed, which, by the way, we could say that for the last 25 years as well. Gold did take a little tick up. The euro took a tick up. Yen took a tick up. Pound took a tick up. Swiss franc took a tick up. So as the U.S. dollar declines, okay, maybe on that report, those other currencies sometimes don't necessarily have to be better, just someone else is worse. And that someone else today is the U.S. dollar. Okay, so as the dollar goes down, think teeter-totter. If one side goes down, who's the other side that is actually going up? They didn't do anything. All they did is they just saw the U.S. get worse, and they benefited from that today. Now, I want to kind of bring up what these charts look like. Let's start with the Dow first off. Now, if I were to ask you, tell me what you see on this chart on the Dow, how would you read it? Now, remember, there's a lot of people when they talk about markets, they talk out of both sides of their mouth, and at the end of it, you don't know what they just said. So one of the things we've been trying to really do is stick with the bullish trend. The portfolios have stayed bullish. If we go to the monitor account, we've tried to stay positive delta, which means we have a sensitivity that if the market were to go up, the portfolios could continue, potentially higher, okay? And I'll show that in just a moment. Now, if you take a look at this, you're now going to see that when we take a look at kind of where this resistance is, a lot of people, they like to see a breakout, and they like to see it really a retest. Let me ask you a question. Would today be an example of a retest if I zoom in? And I think all of us could probably say 424 is maybe a level of resistance, right? Would you say that today's a retest? And if you looked at this, we could say, hey, James, we zoom in on this last place where we had these higher lows, okay? A little run to the upside, pull back, run to the upside, pull back. This was the last pullback area. And if we said so when the market was down, let's say 1%, 1.5%, whatever it was, did the market break support? No. Did the market take out the prior low? No. Okay, this is why we don't look at necessarily the color of the candles. We're watching the levels. And if we take a look at kind of the wicks we're seeing on the chart, someone is buying really on the intraday dips, okay? Now, BJ actually says engulfing into double hammer. Know where you're going with that. Like to see obviously longer tails, but I think it's fair in what you're saying. Overall, when we look at kind of the close on Friday, you look at the close here. If we closed here, then we would be trading at the highest part of the session, okay, with that news. So in the comments, what do you think about the news? If we kind of use the market as a gauge of that news, the equity market, not really concerned right now, absorbing it very, very well, which if you're a bull, you like to see that. Super quick on the SPX and say, well, how's that fared? Now, remember, the SPX, we talked about the SPX breaking inside the old channel, okay? That old channel was 58.62. Sorry, speak German. We always go backwards, okay? 58.62. And if you look at that, you're now going to see that did this retest. Well, if I zoom in on this right-hand side, you're going to see that we got up through the 58.62. We went down for a day, bullish engulfing right at the old resistance, new potential support. And you're going to see that did we actually take out the prior low at 58.62? The answer is no. Did we break support? The answer is no. Okay. Now, was it down this morning? Yes. Where is it now? Okay. So when it was down this morning, did it take out the low? No. When it was down this morning, did it take out support? No. Do you ever say yes? No. I'm just joking. We'll say yes eventually. Okay. Eventually. Well, you're now going to know. So overall, kind of like holding in there. Now, remember, if you're a technician, you're probably saying, James, the path of least resistance on these channel plays is we go up to maybe the middle of the channel and or the top of the channel. 58, 59, 83 is probably the middle range, the middle target area, which we could be very close here today. And you're going to see at the top, 61.12. NASDAQ, just real quick, okay, and then we're going to move to the sectors. When you take a look at the NASDAQ, it looks very much like the S&P. NASDAQ led to the upside, then followed by the S&P. And does anyone see anything interesting on the NASDAQ that you don't normally see? If we look at, let's say, the NASDAQ, what's very unusual that I want all of us to recognize is, James, when we go up, I get it, green candles. But when we go sideways or when we pull back a little bit, aren't we supposed to get a red candle? How come we're not getting a red candle? Well, because there's some dip buyers out there. And when people see the price low, they're buying on the dip when the candle is red, okay, for the day, maybe just intraday, and they're buying on the dip, and they're closing the price higher than where it opened, thus causing a green candle. So very interesting is you probably thought those bears thought, okay, today is the day. This is the day I've been waiting for. And so far, if they went bearish on the open, it rammed the other way. Okay, another bear, probably thinking, my gosh, maybe I just hate bearish trades in general. You got to remember something. Most investors, they're long only. Most, okay? We're not saying that of course, some people trade bearish, but probably the majority are long-only investors. And some of the portfolio managers, they might be, managing portfolios that they're long-only as well, okay? So when markets go down, it's a niche group of investors and or traders that are really trading bearish, if you will, okay? And you got to remember that volatility doesn't last forever, okay? Now, the one thing I do want to point out just real quick on the sectors, okay? Now, let me just say something real quick on the VIX, and we're going to move this here. What did the volatility look like today? It did pop up. The open was the high, and it's faded. We have not seen that green candle yet on the VIX, and if you notice that turn, and Lisa kind of pointed her eyes towards that, we want to be aware that some of these stocks might be getting up near their target areas. We do see, when you look at the divergence on the MACD, and my MACD is an 817.9 setting, that divergence is still there. So keeping an eye on where your targets are, adjusting stops up, which we talked about on Friday, and so on. It's still important here, because when we see a bullish MACD divergence, we have a great likelihood to actually see the VIX increase. We're going to be watching that over the next couple of days. Today, it popped, but we're not really seeing the turn yet. But that does not mean you don't keep your eyes on the target areas and practice adjusting stop levels. Now, what I want to do is fast fire through a couple sectors. When you look at utilities, tell me what you see. Okay. Now, if you look at utilities, that's almost a brand new high on utilities. Okay. Now, you got to remember, different sectors offer different things. This sector of like utilities and staples, they really offer kind of more stability. They offer also with that current dividends. The dividends could change over time. They could be cut completely. But the biggest actually thing is, this is why there's different sectors. There's different strategy. There's different environment, right? If you look at, let's say, the staples, we're continuing to really see it broke down and then it snapped back up. Ladies and gentlemen, this is when we see these breakdowns and then V patterns where the up move was faster than the drop. Really, you'd probably say staples could be very bullish. Keep an eye on this area, okay, or this neighborhood, if you will. And also keep an eye on, also with that, the utilities. The other one we actually really want to point out is the real estate. Now, real estate is kind of interesting, and I'm looking at the real estate sector. Tell me what you see on the real estate. Now, remember, with real estate, you're kind of watching what the interest rates are in general. And if you look at the interest rates, they actually went up to some highs here today on that news. But the sector in general, tell me what you see. Now, I'm not saying that when you look at an inverse head and shoulders that it has to be super symmetrical and it's perfect. Not necessarily true. You do kind of see this left shoulder. You do see this drop down in price, run back up. Some people call that the head or the cone. And now what you're going to see is the right-hand shoulder. So when you look at now, when do these areas like utilities and staples and real estate and healthcare, when do they typically get a bid? And when I say a bid, we're talking about the buyers maybe become interested. These areas tend to increase when the volatility is low and rising. Don't say I didn't tell you that, okay? We've said it 100 times. We're going to say it 101st time. Now, the biggest thing to kind of remember is when I think of the areas of like utility, staples, real estate, and healthcare, I think of it like a ski coat, okay? A hat, gloves, things like that. When the market is super, super, super bullish and everyone's just wearing a tank top, shorts, and wearing thongs on their feet, okay, or sandals, however you say it, wherever you're from, a lot of people are like, well, I would never buy like a winter coat or a ski hat or whatever, or boots, okay? But these areas, if the market becomes more volatile, there's a difference in what you're really buying, okay? Now, they're related to the equity market. Clearly, in general, there's correlation there. But keep an eye on these groups of utilities, staples, and also real estate. Healthcare has not performed well. We talked about that last week. We're going to not even take the time to look at it. Now, the one thing we want to kind of do is go back before we look at our examples. When you go back to industrials, ladies and gentlemen, that's been an area that we've been really watching. That actually hit a brand new high here today, okay? So when you look at industrials, it has crashed higher. you got to remember is when you look at the current price of the stock, everything that they know about that stock is priced into the current price. When you look at stocks, people buy them in what they think they could do going forward. The fact that industrials have shot to a brand new high says that maybe what the economy has been going through historically might not be the same in what it's going to be doing in the future. Now, wait, is that good or bad? Well, if you got industrials hitting a brand new high, someone is thinking that has money, that's pushing up the price, that's buying the areas, etc. Someone's actually thinking the economy is going to be heating back up. Now, does the whole United States gain in that on a balanced level? Absolutely not. Some parts of the country do better than others, okay? Now, one other thing I want to do is I also want to bring back up the other area just briefly, and I'm going to flash these. When you take a look at the communications, that's pretty much held in there. That's also eclipsed that prior high at 523. That's an area we're going to continue to watch. And if you look at, let's say, the technology, that's an area which very much looks like the NASDAQ. You look at discretionaries, and we're going to talk about that. You see that that's held in there. The moving averages are still green, okay, on that, but did slip down here today, recovered. And the last one, but not least, the IXM. And if you look at the IXM, looks very much like the industrials, and it's just sitting within 4 points, within 1% of the all-time high. This has been a clinic, okay, on what we call diagonal breakout reversals. Lesson number 100, again, the market wins, okay? The overall is that sometimes the greatest reward-risk ratios can actually be when the volatility is the highest. You remember when the VIX was over 60, okay? And, well, it was at 17 on Thursday and Friday. How about that? Now, let's go back to just real quick. Are there any questions? Chris B says the trend before the pattern was up. Doesn't that negate the pattern? Chris, on which one are you referencing? Let me know on which one. Now, I want to kind of go back to something. So the reason why we talk about the markets and the sectors is we want to kind of know what areas we could probably be looking at. What I want to do first, okay, is I want to take a look at just a couple stocks. And one of them I want to really take a look at just real quick is MCD, okay? Now, if you take a look at MCD, McDonald's, I want to also go back to the chart that we talked about on Friday, okay? And you're going to see that this is the chart that we kind of use as a beginning point, and there's nothing wrong with that. And what you're now going to notice is McDonald's, and by the way, a lot of times it's sometimes nice to go back to a 3-year weekly chart, and this kind of really takes out a lot of the noise. In other words, if we were to, let's say, really kind of draw this, okay, let's maximize this, try to get that down just a, see, can't get that bottom off. But now what I'm going to do is, in this case, is I'm going to kind of say, look, do we have an uptrend? And I think we could say in general, there's been some higher lows over time. I think we could also say that, you know, what type of pattern do we see on the chart? It kind of looks like an ascending triangle. These prior touches right here, these highs, if we kind of go back and look at this, kind of 296, let's just say 300, okay, right around 300 to like a higher support. But then lately, we haven't been dropping down to the trend line. The only drops down to the trend line we had was on that week and that week, and they were lower shadows. Those are the two main words that we've really been talking about the last 10 days or so. Lower shadows, also known as tails, okay? And those lower shadows really represent where the price went down to inter-week, because we're looking at a weekly chart, and someone bought off the dip, or persons, or portfolio managers, and so on. Now what you're going to see is, so if the price is not really coming down to that diagonal line, there might be some investors speculating that maybe that price level could go higher. Now, if I go back to, let's say, the daily chart, what does it look like? Well, if we go back to this, okay, we're going to see on the 10-period moving average, it's been green. We actually had a cross and the 20-period moving average go green on the 16th, on Friday. If we look at today, we see that the 10-period moving average greater than the 20-period moving average, and there's some shading there. Now, what the investor is trying to do, now what are they really trying to do? They're trying to invest where there's some of that green shading, okay? When there's some of that green shading, they're trying to be in. When there's that red shading, they're saying maybe not. When there's that green shading, they're trying to ride that trend to the upside. Now, here's the thing. We don't know how long those shadings are going to last for. Sometimes you get in a more neutral range stock. You know it's more neutral when the green shading doesn't last as long, and you get red. Green, and then red. Green, and then red. If those shadings only last for, let's say, 5-7 trading days, you're probably more in a swing trading range area, okay? Now, what might kind of give the investor the idea that maybe this could actually break out? Now, I also want to go back to, let's say, the weekly chart. What might give the investor an idea that the daily chart might be choppy? Answer, if the weekly chart is not showing both moving averages green on the daily chart, that would probably give us the idea that the daily chart could be choppy, like we saw. If you go back to where we were in March that I'm pointing to, the 10-week moving average was down. And when you go look at the daily chart, that's when you're probably going to see some choppiness. If you look at the weekly chart and both moving averages are green, better chances on the daily chart that you're probably not going to be seeing as much choppiness as we saw in Mickey D. Now, in our example, really on McDonald's, I want to really go back and kind of look at it, just a quick trade example on this. So really, if we look at this from, let's say, 298 to, let's say, this level right there, that's about $19. That $19 channel width is what some technicians might say, hey, James, I'm seeing a channel, and I'm trying to trade the breakout itself, okay? Now, I'm going to kind of mark this right here. Now, what we talked about on Friday, so Michael Fairborn was out, and what I did is on Friday, I talked about using scripts on the chart. And so if I go to this just real quick, you're going to notice those dots again, okay? And if you don't mind, I'm going to strip those lines that we have. And what do we see here today? The orange dotted line really represents a what? Well, let's go back and double check. If you say I can't remember, it was really a 10-day high, okay? And what you're now going to notice, it was a 10-day high. There was also a 20-day high and a 55-day high. And so the orange dots represent the 10-day high over time. And we hit it again. Now, what you're now going to notice is today, the blue dotted line, that is also, in this case, the 20-day high, okay? Now, what happens if you're hitting the short-term high and the 20-day high and the 55? It's just more confirmation, okay? Now, what I'm going to do on this Mickey D is we're going to buy the shares of the stock. And if you don't mind, I'm going to come back into here and I'm going to click on the trade. We're going to go to the MCD. And if we click on the MCD, you're now going to see that we're going to right click on the ask price. Now, we could put the order right on the chart, which we could. I'm just going to right click on that. Going to go to buy custom, and I'm going to go with OCO bracket. Now, when we go back to that and just say, where was that target again? Well, that target was really right about when we added, let's say 19.2, where the resistance was. That's going to give us a potential target at right about 339, okay? So if we put that target right there, 339, it's going to be about right there. Now, are we saying that could it go there? That's the target, right? It could. Could it go higher than that? Yeah, okay, it could. So that's a bad part about targets. If we set the target and it blows through the target, it's not saying it can't go any higher. Just this is where the paper money account is trying to sell into that target area. Now, if we also go back and say, look at the stop, we're going to go back and say, where's that stop? So there's two levels on this chart that many technicians would really look at. Number one, where the breakout was. The second area is maybe where the moving average is. And if we set a stop below the 318-ish area, it's going to be less potential reward. If we try to give some more breathing room, there's going to be more risk, but a lesser chance of being stopped out. It kind of depends upon what you like to do and what your experience is. And so what we're going to show in this case is we're going to set the stop. We're going to take 313.46 less 2%, and we're going to set a stop underneath there, okay? And that price is 307.19. When we go actually back to that, we're going to say 307.19, and we're going to put it right here, okay? Now, I'm going to go dated GTC. So what this is doing, and this goes back consistent to what we said we're going to talk about, is seeing the entry setups today, okay? Not like 2 weeks ago, not a week ago. Want to see the entry setups now. Are they there? Can we recognize them? Now, the other thing I'm going to do is just position size for this just real quick. And I sure hope that this is going to let the paper money account get in. There's the capital size. It's about 20 shares. Once we know it's about 20 shares, we could just say, hey, 20 shares, there it is. And we're going to confirm and send. Got a target and got to stop. Now, remember something just real quick. So the reason why we do top-down analysis and we look at the market and we look at the sectors, if the sector of discretionaries is going up, what are some of the bigger holdings in there that might cause certain stocks to go up? Okay. Mickey D's could be one of the top holdings of that sector in general. So if someone buys the sector in general, they're really buying a slice of the Mickey D's pie, if you will. Now, what I'm going to do is, remember with the stop orders, there's no guarantee the execution price will be equal to or near the activation price. Send the order. Now, if I were to ask you a question like, hey, what other discretionary stocks might be getting a little lift here? Now, let's say we didn't know anything. I mean, we didn't know anything, okay? We went back to Market Watch, and we're going to go back to Visualize, okay? Going to click on that. And let's say I said, look, I'm a simple person. I just want to look in a small group, okay? Now, if I looked in this small group, we could look at the S&P 100, and we could see a list of stocks right here. Sure, it's going to be a smaller list, okay? So that's a good and bad. You get a smaller list. The bad thing is it's a smaller list. If someone said, James, I can handle bigger lists, okay? And if I go to the S&P 500, what you're now going to really see is if we said, where's consumer discretionary? It is right here. Now, I do want to point something out here. There's Mickey D's, Booking Holding, which is also up near the high. You are also seeing in there AutoZone, its counterpart or its cousin, O'Reilly's. They're doing a 15-for-1 stock split. You're also seeing coming up. And you're also seeing with that, AutoZone is getting a little lift as well. Sometimes if one does it in the neighborhood, the other one might do it. And AutoZone, they're almost $4,000 a share as well. So maybe some investors speculating, could O'Reilly's with the 15-to-1 stock split, could AutoZone maybe do that as well? Just kind of a thought there. Now, the example I really want to go back to is I want to go take a look at just real quick is Costco. Okay. Now you tell me what you see. Okay. Now, so when I taught the class on Friday about these scripts, so we said that scripts could be, number one is scripts could be on the column headings, right on the Market Watch quote page. And we've talked about that. Sure. Okay. That's one way to do it. The second way is to use scripts is to actually, you could scan for them. Okay. Scan for something like filters. Okay. And you could use scripts there. You could also scripts, for example, on the left-hand side, like you see right there. And you could also, even with that, use scripts right on the Market Watch page. And you actually see them that we actually use them there. And last but not least, scripts could also be used really on the charts. Now, there was someone on Friday that said, hey, I watched the first 25 minutes of the video on Friday, and you didn't talk about scripts at all. These lines on the charts are scripts. They're taking, and I explained this in the first 5 minutes. It's okay. Some people maybe didn't catch the subtlety there. I don't think it was subtle. I think it was blunt, but I'll re-say it again. The nice thing about scripts is we can use the scripts on the chart to help us see what we're seeing on the Market Watch. A lot of people, when they see the Market Watch, they can't decipher what this means. It takes some experience. It's almost like flying an airplane. You can learn it, but it actually, there's more dials and instruments, if you will. This is actually, I believe, easier if someone said, I don't know what the Market Watch page is telling me. Can you show me what we're seeing on the Market Watch on the charts using scripts? That's what it was. That's what it is. Okay. Now, the biggest thing is I taught searching for 8 years. And I saw what it was helpful and what was not helpful. And what's not helpful, I just don't talk about it. What's helpful, I continue to talk about it, okay? So the nice thing about scripts here is that if someone said, look, I'm a beginner, I'm intermediate, I'm advanced, everyone can get a little slice of the action here, okay? In terms of being able to use these charts. And what I'm going to do is I'm going to send this chart to you, okay? And remember when we talk about the scripts, they're not guaranteed for accuracy or timing, okay? They're just showing what is happening on the chart. Now, at that point in time. Now, what I want to do is we got Costco that has an earnings coming up. What you're going to notice on the chart is the orange dots represent the 10-day high. The blue line represents the 20-day high. And what you're going to notice in the last couple of days, we've actually been seeing it's been pushing up to those lines. You're also going to notice that on the chart, and by the way, if I put Costco on a watch list, what should we see on the column headings? Well, number one, the 10-period moving average probably has been green for the last 3 days. Second, what are we probably also really seeing on the 20-period moving average? We should probably be seeing that 20-period moving average has been green for the last 2 days or last day. And also, what else should we be seeing on the column headings if we pulled it up on the market watch? We should be showing something that maybe is almost getting a crossover, okay? Now, with that, you are also going to see underneath, there's a little close above the high of the low day dot, okay? And lastly, you're going to be seeing if we said, hey, could I find a stock that's maybe at a 20, 55, 20-day high, etc., that should also be coming up as well. Let's see how good, or if it does, we're about ready to find out. Let's actually go to just create a watch list. Let's just kind of label this today's class, 519. Okay, so 519, I'm going to put Costco in there. Tell us if it kind of shows us that. So what we're kind of expecting in this column heading, so 2 days that it shows, we can see that. We saw it visually on the chart. Second, when we look at the 20-day moving average, we see it right there. The moving average crossover, it's not getting the crossover yet, okay? But we saw it's close on the chart. We do see it's a breakout. Why is it showing the breakout, continuing yesterday breakout? Well, because it's eclipsing that 1018 area. Okay, we understand that. And if you actually see why is it showing a Cahold, it really shows those Caholds over about the last, inside the last 3 days. The Cahold came from Friday. That's why on the market watch, it's showing that. Now notice what I'm doing here. I laid down the market watch first, then I laid down the charts. Now what I'm doing is I'm circling back and showing how the charts, and I said this on Friday, the charts are mirroring what's happening on the market watch. A lot of times people say that there's a lot of stuff on the market watch. I'm showing you how it relates to it, whether you like to see it in a table format or a chart format so everyone could grab what they want to see, okay? Or trying to see. Now what I'm going to do is I'm going to right click on the chart. Now some people might say, yeah, but there's earnings coming up, okay? Well, let me ask you a question. What do you think the earnings are going to be? Poor? You think they're going to be poor? Okay. Now, here's the deal. We don't know what the earnings are going to be. That's the truth. There's no investor that knows what those earnings are going to be, okay? If the company is held in tight and no one knows what they're going to be, you know, and we talked about the reaction on Thursday about earnings in general, okay? If someone is a portfolio manager, okay, the greatest time to sell at ease would be on the earnings day when there's above average volume. And there could be some investors who are waiting to sell. True, okay? Now, there also could be some investors who are trying to buy a big position as well. Notice on the earnings day and around the earnings day, there tends to be higher volume. If you were the portfolio manager, you would probably be actually trying to put in those bigger chunk orders where the stock could absorb that type of volume, okay? Now, we're not talking about 100 shares, of course. Now, what I want to do is I want to go back and say, okay, where is that prior high? Well, the prior high is right around 1077, okay? Now, what I'm going to do is going to come back to this. Let's go to the trade tab, excuse me. What we're going to do is type in COST, okay? And what I'm going to do is going to right-click on the ask price, buy custom with OCO bracket. I'm going to come back right into the charts. And what I'm going to do is, if you don't mind, and I'm just in the paper money account, I'm going to just go ahead and put these numbers here. The numbers, we actually said before that we saw 1075, I think I said 1077 or so. If we put 1075, okay, right at that prior high. Now, some traders, they like to try to sell at the prior high, buy on the dip and or the breakout, try to sell it at the prior high. Now, here's one thing that's kind of interesting about technical indicators, So what indicators is it using? Whole moving averages, Cahol dot, 10, 20-day highs, okay? If we put a MACD up, if we put a CCI up, don't you think that if the price is going up, don't you think that those would actually be showing as well? That's the point, okay? So the first thing that we're really trying to help you read is the price graph. The price graph is really, now sometimes people take it the opposite. They're like, I want to learn about the MACD. I want to learn about the stochastics. I want to learn about the CCI. The problem that you got to remember is those are reflections that are delayed by looking at the price graph. There's a reason why the price graph's the biggest chunk of real estate, okay? It's not to say that the lags, okay, or the confirmations are bad. It's just we're trying to actually, how could I learn to read the chart, okay? So what I'm now going to do is I'm going to zoom in on this. If we were to kind of use a tighter support area, now there's good and bad about that, it'd be 1013. If we said, James, I want to try to give it a little bit more room, it's going to really be about 1,380, okay? Now, again, we talked about this reward risk and things like that on the last week, kind of talking about that and kind of the viewpoint that we have on that. It's all about probabilities of hitting those stops, and it's also about market posture and sentiment as well. Include that with the sector as well. We're going to set the stop at 983.72, and I'm going to put that right there. So the first trade we actually did was, okay, Mickey D's. Second discretionary stock we're actually going to use is Costco. Now the capital size that we're going to use, just kind of double check our numbers. There's the amount. It's going to be 6 shares. Once we know it's 6 shares, just going to type it in. Okay, there it is. So one thing I got to go back and just verify is, got a target price, dated GTC, stop date to GTC. Okay, I'm going to now go confirm and send. And now we can see that order. Notice that red line again. With stop orders, there's no guarantee what it fills at is going to be near the activation price. So when it says activation price, it's saying the stop price that you typed in. That's the trigger to sell. The execution price, what it fills at, can be different, okay? Send the order. Now, so the comment was from Alan, any reason why we have not done an option trade on Costco? So Alan, someone else would actually say in this case, any reason why we're doing option trades and not stock trades? So here's the point, okay? If the paper money account buys stock and the options are liquid, I mean, it could be like an option trade as well, like a long call vertical, a short put vertical, and so on, okay? Now, how high the delta is, if you pick a long call, long synthetic, and so on, those are option strategies that are more sensitive to direction. So if you said to me on a liquid stock, hey, wonder if we were to consider a long call vertical or short put vertical. I mean, could the paper money account do that? Sure. But I'm just trying to also kind of make sure we kind of stick to doing stock and option examples. But if we want to do an option, you know, why a vertical? The reason why a vertical, it has a built-in defined risk on that. So if this were to gap down, there is defined risk built in. That is not if the stock goes to zero, like a stock investor. That's why I would say a vertical. Now, you might choose something different. In our example, that's what we would show if we did an option example, okay? Now, if we actually take a look at this, okay? I'm also going to go back to other examples that I just want to kind of point out just briefly. We also did see, for example, okay, when you look at a stock like CRWD, and let's kind of go back to kind of just this chart just real quick. On CRWD, we've had like a prior high, right? And we've kind of had like, if you will, maybe like a symmetrical triangle and or pennant pattern. Now, it's kind of unusual here today that we're seeing a pretty big candle at the apex, if you will, of the triangle. Now, what you're going to notice is if we took this all the way to the right, we're probably right around 455. Its earnings are really on the first week-ish of June. Now, just because it trades shares of stock doesn't mean the options are liquid. About ready to find out. So, classic example, there can be option liquidity, but it can also just be on certain strikes. And this is where sometimes there's just too many strikes, and investors are kind of picking which strikes they want to get in, okay? Now, in our example, what we're going to show, we're going to open up the strikes, and what I'm going to do is kind of see, can we go down a little bit further? So if we went to the 430, trying to give it some room, trying to also have a lesser delta. So the delta is showing two things. Statistically, the probability of the stock to close 1 penny below the strike price. As of right now, 37% chance, okay? To close below. If we actually said the 37 is in reference to the change in the option price over the change in the stock price. Stock price goes up $1. Theoretically, the model would be that the options would decline by 37 cents. If the stock went up, down $1, the options would increase. We're talking about the puts here, okay? So that's what it's actually explaining. We're going to actually choose the example of the 430, and we're going to show the example of the 420, okay? So in this example, if someone says, hey, I kind of like more defined risk trades, and I want to kind of practice doing like selling the 430. If you sell the 430, what do you think the stock is going to do? You think the stock's going to stay up above the 430? What is the purpose of the 425? Well, the purpose there is to make it where there's a built-in max loss, because when you buy the put, that's a right to sell the shares at 425. Now you might say, I don't have the shares yet. That's true. When you sell the put, that's the obligation to buy the shares. So if you buy at 430, and then you have a right to sell at 425. Now think that through. If I buy at 430 and I can sell at 425, contractually, that's $5 worth of risk. But we got also a $1.97 credit. So that means that it actually is showing us, well, what is the potential max loss? Spread minus the credit, 303, the max profit being the credit, okay? Now, notice something, so this will be in our example that we'll do as well. When you go back and look at this, and you look at this on a weekly chart, now, some of the things we've been talking about is when you look at some of these security stocks, some of these, they've had these classic U or V type patterns, okay? And we've hit ad nauseum, and some of you thoroughly enjoyed it. I did. Okay, when we see these V patterns, right? And someone says, I'm going to wait for us to take out the prior high. Okay, fine. We hit that, okay? Now, I'm fast fire here. The other stock that also an investor might be watching, since we're talking about industrials, is a stock like Fast, okay? That's had a pretty decent move. The other one I kind of also want to keep an eye on that we talked about last week directly is BlackRock. That actually has poked that 988 level. GEV, the reason why we're going to bring this up, it's kind of right in that range of what we just saw. Remember, GEV's, its brother is General Electric, okay? Look at what General Electric did, GE. Keep an eye also on GEV, which might try to trail or track to what GE is doing, okay? And the last one, but not least, is Domino's Pizza. I'll say two more, CME and ICE. Domino's Pizza is kind of also right in that range as well, okay? Now, your homework is to go out and actually practice what we talked about on Friday and like what you saw us do. Use the scripts actually a way to actually kind of see these bounces or breakouts right on the charts, okay? So also want to give us a quick reminder that with what we discussed here today, it was done for example, illustrative purposes only. We have actually coming up right at the top of the hour, and I thank Connie for helping in chat. We have trading covered calls and short puts done by Barbara Armstrong. Then coming up, we have trading ETFs by Connie Hill at 4 p.m. Eastern. So join us on those classes as well. Now, remember when we talk about investing, all investing involves risk, and this has been the class on trading with technical indicators. Make sure to go out and do your homework and practice from what we talked about on Friday and today. Thanks so much. Stay tuned for Barb coming up next. Bye-bye.